Shariah screening indexes and institutions. Globally, there are approximately 11 Shariah screening practices, most of whom provide Shariah indices. They include Although all these Shariah-compliant screening methodologies practice a two-tier method of screening, qualitative and quantitative, they differ in some measures and leniency. IOF Shariah screening criteria. IOF business activity screening. Companies' primary activity should not involve any impermissible business activities, such as activities based on riba or interest or usury, trading in uncertainty or risk, gambling or games of chance, manufacturers or traders of impermissible products or services. IOF Financial Operation Screening. IOF focus on the following financial ratios: interest-taking deposits less than 30% to market capitalization of total equity, interest-bearing debt less than 30% to market capitalization of the corporation, total market value of illiquid assets more than 30% to market value of the total assets. Did you know? The IOF was established in 1990 with the aim of preparing accounting, auditing, governance, ethics, and other Shariah standards for Islamic financial institutions. Its Shariah screening criteria are detailed in the standard issued in May 2004. Dow Jones Islamic Market Indices Shariah Screening Criteria. DGIMI Business Activity Screening. According to DGIMI Shariah Supervisory Board, the following 6 sectors are identified as forbidden sectors: alcohol, port-related products, conventional financial services, entertainment services, tobacco, weapons, and defense. DGIMI Financial Operation Screening. The DGIMI Shariah Supervisory Board uses 3 financial ratios to screen out firms with high leverage and interest income and expense. Accordingly, each of the following 3 financial ratios must be less than 33%. The ratio of total debt to trailing 24-month average market capitalization, the ratio of cash and interest-bearing securities to trailing 24-month average market capitalization, the ratio of accounts receivables to trailing 24-month average market capitalization. Did you know? DGIMI are constructed by screening out stocks that are incompatible with Islam's prohibition of interest and selected lines of business. It is the first international Islam market index, which was introduced based on Dow Jones Shariah Board Fatwa issued in 1998. FTSE Bursa Malaysia Emas Shariah Index Shariah Screening Criteria. SAC Business Activity Screening. According to the SAC, companies will be classified as Shariah non-compliant if they are involved in the following activities: financial services based on riba, gambling, and gaming, manufacture or sale of non-halal products, conventional insurance, non-permissible entertainment activities, manufacture or sale of tobacco-based products, stockbroking or share trading in Shariah non-compliant securities, other activities deemed non-permissible according to Shariah. SAC Financial Operation Screening. According to the SAC, each of the following 2 financial ratios must be less than 33%. The ratio of total debt to trailing 24-month average market capitalization, the ratio of cash and interest-bearing securities to trailing 24-month average market capitalization, the ratio of accounts receivables to trailing 24-month average market capitalization. Did you know? The KLSI was launched on 17 April 1999 and guided by the Shariah Advisory Council of the Securities Commission of Malaysia, SC. The SEC is to assist investors to identify Shariah-compliant securities by formulating a Shariah screening methodology. Financial Times Stock Exchange Shariah Screening Criteria. The FTSE Global Equity Index Series was launched in October 1999. Its Shariah screening methodology was developed by a Shariah advisory group, YASAR, who re-evaluate the Shariah compliance of its index companies on a quarterly basis. FTSE Business Activity Screening. According to FTSE, the main areas of business activity screening include conventional finance, alcohol, sport-related products, tobacco, weapons, and entertainment. The FTSE screening methodology applies a threshold for impermissible business activity, represented by 5% of total revenue on average. Companies that failed the first screen are rejected from the Shariah investable pool. FTSE Finance Activity Screening. For financial screening, FTSE uses total assets and applies a 33% cap on the threshold for factors such as total debt relative to total assets, cash and interest-bearing securities over total assets. The threshold for the sum of a company's accounts receivable and cash over total assets is set at being less than 50%. Total interest and non-compliant activities income should not exceed 5% of total revenue. Did you know? The FTSE Global Equity Index Series was launched in October 1999. Its Shariah screening methodology was developed by a Shariah advisory group, YASAR, who re-evaluate the Shariah compliance of its index companies on a quarterly basis. Standard & Poor's Shariah Indices Shariah Screening Criteria. S&P Business Activity Screening. According to the S&P, companies will be classified as Shariah non-compliant if they are involved in the following activities: financial services based on riba, gambling and gaming, manufacture or sale of non-halal products, conventional insurance, non-permissible entertainment activities, manufacture or sale of tobacco-based products, other activities deemed non-permissible according to Shariah. S&P Financial Operations Screening. S&P's three areas of focus are leverage, cash, and the share of revenues derived from non-compliant activities. Liquidity ratios: less than 49% of account receivable divide by 36-month market average market capital, and less than 33% of cash plus interest-bearing securities divide by 36-month average market capital. Debt ratio: less than 33% of total debt divide by 36-month market average market capital. Did you know? S&P Dow Jones Indices introduced S&P Shariah Indices in 2006. The indices rely on rating intelligence partners to provide the Shariah screens and filter the stocks based on these screens. Morgan Stanley Capital International Shariah Screening Criteria. MSCI Business Activity Screening. The MSCI qualitative screen excludes shares of all companies engaged in activities strictly prohibited in Islam. These include companies whose major line of business is dealing with financial transactions involving interest, gambling activities, intoxicants such as alcohol or similar drugs that can obscure one's judgment, pork and/or excessive risk-taking such as insurance and speculative investments. MSCI Financial Operations Screening. MSCI uses quantitative screen to further screen companies with core activities as permissible, but have a portion of revenue from non-permissible activities. The following financial ratios must be less than 33.33%. Total debt to total assets, cash and interest-bearing securities to total assets, account receivables and cash to total assets. Did you know the MSCI Global Islamic Indices was launched in March 2007 following a fatwa by an independent Shariah board certifying MSCI Islamic Index Series methodology? Like others, the screening of both business activities and financial ratios are used to apply the Shariah investment principles. Thomson Reuters Ideal Ratings Shariah Screening Criteria. Ideal Ratings Business Activity Screening. According to Ideal Ratings, companies will be classified as Shariah non-compliant if they are involved in any impermissible activities: Shariah non-compliant food production, tobacco and alcohol, gambling, false advertisements and hotels, conventional banks, financial institutions and insurance companies, entertainment and music production, trading of gold and silver, arms manufacturing, manufacture or sale of tobacco-based products. Ideal Ratings Financial Operations Screening. Ideal Ratings Shariah stock screening uses 3 financial ratios to screen out firms. The ratio of total debt to trailing 12-month average market capitalization must be less than 30%. The ratio of cash, deposits, and interest-bearing investment dividend total assets must be less than 30%. The ratio of cash, deposits, and receivables to total assets must be less than 67%. Did you know Ideal Ratings has been providing Shariah screening and fund services for financial institutions since 2006? Similar to the others, Ideal Ratings has adopted the 2-stage screening process to filter its Islamic indices. The Stocks Europe Islamic Index Shariah Screening Criteria. Stocks Business Activity Screening. The Stocks Qualitative Screening excludes companies whose primary activities include Shariah non-compliant food production, conventional financial and insurance companies, gambling, weapon and arms manufacturing, entertainment, trading of gold and silver. Stocks Financial Operations Screening. Stocks Quantitative Screening further filters companies with core activities as permissible under Shariah, but have a portion of revenue from non-permissible activities. Shariah non-compliant debt to total assets ratio cannot exceed 33%. Interest-bearing assets to total assets ratio cannot exceed 33%. Did you know? The stock Islamic indices are designed to provide broad equity market exposure in compliance with Shariah principles for Europe and the Eurozone. The screening process is monitored by the Stocks European Islamic Index Shariah Supervisory Board, established in February 2011. ISRA Bloomberg Shariah Screening Criteria. ISRA Bloomberg Business Activity Screening. The ISRA Bloomberg Qualitative Screening excludes companies whose primary activities are not in congruence with the Shariah. Such activities include Shariah non-compliant food production, conventional financial and insurance companies, gambling, weapon and arms manufacturing, entertainment, and trading of gold and silver. ISRA Bloomberg Financial Operations Screening. After the sector screening, the companies are subject to financial screening. There are 2 financial ratios that need to be met. These are the cash-based ratio and debt-based ratio. The ratio of total debt to trailing 24-month average market capitalization, and the ratio of cash placed in conventional accounts to assets. Did you know? The ISRA Bloomberg screening methodology also has sector and activity-based screening like other methodologies. After screening out the companies having impermissible business activities, it focuses on companies with mixed activities. Karachi Mizan Index Screening Criteria. KMI 30 Business Activity Screening. According to the Mizan Business Screening Criteria, the primary line of business of a company should be Shariah compliant in all aspects. Therefore, investment in any company involved in following activities is not permissible: pork, alcohol, and tobacco-related products, conventional banking and investment or insurance, entertainment deemed impermissible in Islam, manufacturing of weapons. KMI 30 Financial Operations Screening. After the sector screening, the companies are subject to 5 financial screening criteria. Debt to total assets. The ratio of debt to total assets must be less than 37%. Non-compliant investment to total assets. The ratio of non-compliant investment to total assets must be less than the threshold of 33%. Non-compliant income to total revenue. The ratio of non-compliant income to total assets must be less than 5%. Illiquid assets to total assets. The ratio of illiquid assets to total assets must be more than 25%. Market price per share of net liquid asset per share. The market price per share must be more than the net liquid assets per share. That is, total assets minus total liabilities minus illiquid assets divided by number of shares. Did you know the KMI 30 screening methodology also has sector and activity-based screening like other methodologies? After screening out the companies having impermissible business activities, it focuses on companies with mixed activities.